Let's welcome in Anil Manghnani, Director at Modern Shares and Stockbrokers, who's joining us from Mumbai. Anil, the Nifty has slipped below 8,000 level. How crucial is this? What are the downsides that you're looking at? What levels would you be looking at? What kind of activity are we seeing when it comes to the put writers with 8,000 strike positions? What do you make of this move?
I wouldn't comment on options because that's not my expertise. But from a technical point of view, see, this is what is clear. When a market is grinding down as opposed to a sharp fall, see, because even if you look at demonetization day when it collapsed to 8,000, it pulled back all the way to 8,600 and then it grinded again down to about 79. I think when you grind down, generally the process is takes 4 to 6 weeks, ideally a retest. So I'm assuming this is what the market is trying to do, is retest. Now the retest becomes crucial because as long as you don't break 7,900, I'd mentioned 7,900 5-6 weeks back also when we were there, because 7,900 or 7,895 to be exact is the 50% retracement from 68.25 seen at the beginning of the year and 89.68 seen in September. So generally, personally, I believe for markets to hold their overall strong trends, 50% retracement is very crucial. So I'm assuming this is just a retest. The retest is very critical. So I'll keep 7,900 as the benchmark. As long as it holds that, great for the market. If it doesn't, then obviously we have bigger problems going ahead. So what's 7,900? I'm not surprised by the move back from 8,250 odd to below 8,000 because I always felt a retest was very crucial given that we were grinding. Like I said, if it was just a sharp fall and we pulled back, no issues. But because we are grinding, I think the markets are in pain, and you're seeing gradual selling, especially by FIIs on a daily basis. So that pain needs to completely, finish before we can look up again. So I think it's a process. Give it some time.
50% retracement was important. It's closer to 7,900. Yeah. And if we're grinding down, say if it doesn't halt at 50%, then what do you look at? 61%? What is that level to?
Then the next target becomes the 61.8% retracement. But just to explain what I mean by the 50%. See, generally I believe when you hold the 50%, you have a great chance of starting to rally faster and then take out the recent high. But when I've seen markets start doing more than 50% and go down to 61.8 or below, it doesn't mean they eventually cannot take out the previous top, but it just means it takes a lot longer. The damage is more structurally on the charts. So then you have to regroup, you have to bottom out process what we had at 6,800 in February, or in the past we've had at other levels. So in a bull market, 50% holding is fantastic. If it grinds down lower, then it tells you that a lot of more work has to be done at the lower end. That's why I'm hoping that 7,900 holds or 7,895, because otherwise then the process takes a lot longer to come back to 89.68 or 91.19, whichever levels you're looking at.
Right. So Anil, how critical is it that this slow grind down, which you're seeing for the last 6 sessions now, has happened on volumes which are lower than normal? Is it a seasonal thing you're taking your stride, or does it convince you that perhaps its grind down is not alarming?
I think there are a couple of things involved here. Yes, the seasonal thing is an issue because generally at this time of the year, if you go back into history, the last 10-15 days of December, even after especially the Fed meets, and Fed always meets in December. It met last time also and hiked rates in 2015. Generally after that event, the market goes into a lull globally, and I've seen even in India, not so much this week, but next week should be even lighter on the volumes. So I think volume is not surprising. I'm not looking at because even last week the volumes were decent enough on the way down. It's only this week the volumes have been very, very minimal. I think more than that, I think you should look at the FII numbers, even if they are small sellers. But if they're continuously selling, that needs to stop before you can look forward. It's a good thing that the domestic guys have still not panicked. There is no selling on that front. So I think that's another thing to watch out. As long as they don't start selling, and obviously at some point the FII stop selling, that would be an added bonus for the market. So it's all coming together at the end of the year, but I think the demonetization process is taking a little longer than what most people have anticipated. I guess the market is in a lull, probably waiting for the next move from the Prime Minister or the RBI, and obviously since 30th was the date given on November 8th. I think everybody's going to be watching the first couple of weeks of Jan, or if not, then Feb first budget, to see that, because demand is collapsed, because we are in a deflationary environment, nobody knows what's happening with GST. Is there going to be some big bang announcements now that you have, done the whole demonetization move? So I think the market also is looking for some information from the center and looking for some next key before they take, because generally when you're in chaos and panic, your first thing is sell first, then we'll see later. So I think now the market is waiting for the next announcement to see whether that will kickstart the economy or the market, either way.
Right. Anil, in terms of, Nifty and levels, are you surprised by the sort of move that we are seeing in the last 7 days? So, till now, as even you mentioned, on November 9th, there was just a panic bottom that was made. On Brexit Day, there was just a panic that happened, but this sort of selling, every day little bit, it takes time to recover?
It will, and I think the grind is worse. I mean, if you fell, like I said, sharply and people didn't get a chance to sell, then so-called punters or operators are always keen to get the market back. But because they're just selling through it for the last, let's say, 2-3 months, because even though demonetization came in November, the sell-off started grinding gradually in September, October. Maybe not heavy numbers, and then obviously post the demonetization, it's been sharper. But, I think the key why we are grinding down is when we pulled back up from 79 to 82.70 or something, although it was only 200-300 points, that also was very small bars on the way up. It was not convincing big bars taking the market up. So it told you that it's a very small, timid, false move. And the pain is not over. So I think the pain is now. And generally in the past, if you see, even if it's only a retest, let's assume that we don't break 7,900, you will see many stocks actually break their lows that they saw, let's say, on 21st or November when we hit that 79.16 level. It happens. It's typical. I think some of, especially the finance company names or the cement, which have been the ones drastically impacted by demonetization, those two sectors ideally should see newer lows on stocks when you hit 7,900. So if you break 79, then you should see more damage in those names compared to some of the other names that have not really fallen yet.
Right. I just wanted to come to that. Do you think the composition of flows has changed? So we've still now seen names like Eicher Motors, names like Asian Paints go down. Tata Motors have gone down significantly. Ultratech has gone down. Till now, whenever the markets was going down, these names were correcting less. But do you think that flow change has happened?
Yeah, because I think also the names that you mentioned, Eicher, Asian Paints, and a lot of the NBFCs, they have had phenomenal moves in the last 5-6 years, and even in the last 2 years for the NBFCs. Eicher and Asian has been a 6-year or 7-year uptrend. So generally when the last panic comes, you're going to start selling good names also that you're still making money. And now is the time that, panic is spreading across the board. So I would think it will be less in pharma or IT, which have not moved in the last 6 months. But the stocks that have really gone crazy in the last 6-7 months should bear the brunt of this last selling. So no surprise, cement has done fantastic. Asian Paints, Eicher, and the NBFCs have done phenomenal moves in the last 6 years and in the last 1 year. So I'm not surprised that now the panic is setting into them, where people need to just offload because so much money is still on the table to be taken.